Hey there, guys and gals, YouTube world. It is Tuesday, November the 2nd, the year 2021. Hopefully this finds you doing well. Remember, click the thumbs up to like the video. Feel free to comment, feel free to share, and feel free to subscribe. It's been a somewhat busy day so far. And the roofers were back again today, second day. I think I mentioned it yesterday. You know, they were up working on my concrete tile roof, but they finished up. Didn't take them too long to finish up, so that's all done. Still, they're going to get cleaned, but that's going to be probably next week, probably when it gets cleaned, because tile roof will get like black mold or mildew or dirt and whatnot on it. So we're cleaning it up so it'll freshen up and give it a slightly fresher look from the street side, let's say. Let's see, also had the fence guy stop by. And we're going to get a privacy fence installed, a vinyl privacy fence. All contractors are backlogged, so it'll be probably January when that's done. We're going to have to cut down some, kind of like some trees. They're in the palm tree family. They're like thick shrubs. And we're doing that for a reason. We want to get rid of them because rats will get in them and live in them. And we don't like rats living in our bushes. So we have to remove them because that's basically where the fence will go. So anyway, that's that. So something I'm going to talk about today is two things: the BRRRR strategy along with a 401k loan. Because I have done the BRRRR strategy one time and I have used a 401k loan one time. Okay, when I did this, BRRRR, if you're not familiar with the acronym BRRRR, it's B and 4 R's. It's buy, buy, rehab, rent, refinance, repeat. So you buy a distressed property, you buy a property that you know needs work, you buy a property that you have researched, you've had estimates done, you know what it's going to cost to fix it up. You either have done it yourself or you've had contractors go in and look at it or someone knowledgeable look at it and give you what hopefully will be a good estimate of what it'll cost to rehab it. Keep in mind, anytime you do a major project, many times they find surprises that will cost even more, okay? So keep that in mind. But you buy the distressed property, you then rehab it, you renovate it, you do whatever needs to be done. Maybe it just needs to be painted. Maybe it's a minor one, you need to paint it, but you got it well below market value, okay? Because you can find good deals out there. The real estate market is slowing down. Deals that are listed on the MLS, maybe 6 months ago, they're being sold higher than the asking price. Now, offer less. You might be able to get something under asking price. And the properties that need work, a lot of times they'll linger on the market. So you can get an even better deal because the seller knows they need work. So you can maybe get a better deal and maybe even look into seller financing. Well, I'll cover that in a different video. So you buy, you rehab it. Once it's rehabbed, then you get it rented out. The reason you get it rented out, now you got income coming in, okay? Depends, and then the next step is refinance. When you do the refinance, depends on your lender. They may require 6 months of seasoning. When I did it, my lender said it was 6 months from the date I closed on the property. I had to wait 6 months to do a refinance. The refinance is a cashback refinance. So you pull your money back and then you could use your money to deploy again to repeat the process in a different house. That's the 4th R, okay? I'll give you a real life example. When I did this, I did it in Birmingham, Alabama. Okay, I did not live there. I was living in Virginia. It was 600 miles away. I owned one house in Birmingham. My property manager found me a house that he was somewhat familiar with, I think. And he told me it was for sale for $25,000. I put an offer in on it. I went down there and looked at it and put an offer in, I think $22,000 or $23,000. And it came back with $24,000 final offer. That's the final thing. So I said, okay, fine, I'll buy the house, $24,000. My property manager had contractors. He had already had them go through and do up estimates. And the total figure for the estimates was $22,000. It needed a lot of work. When I walked through it, there was holes it had wood floors. There were some holes in the floor and floor joists were rotten underneath. There's a crawl space. Some floor joists were rotten. There was holes in the drywall. Some studs were rotten. The whole place needed to be painted. All the hardwood floors had to be redone. Kitchen, vinyl floor, whatever had to be redone. Bathroom had to be redone. New fixtures in the bathroom, new stuff in the kitchen. I think gutters had to be put on it. And it was a bunch of stuff. But it was $22,000 to rehab it. So it was $46,000 all in. we used what is called a 401k loan. I'm gonna switch gears just a bit and I'm gonna tell you how this works. A 401k loan, if you have a 401k, and there are people out there I've been in touch with who tell me they don't have the money to invest in real estate, but they tell me they have a 401k. So if you're watching, I encourage you to listen to this, because the 401k, you can, if you withdraw the money, you pay a 10% penalty, you pay tax on it, okay? If you take a 401k loan and contact your custodian to ask them about this, they'll tell you. If you take a 401k loan, from my understanding, I'm not a financial advisor, I'm not a CPA, I'm not an attorney. From my understanding is you can take a maximum of 50% of your account balance, okay, 50% of the account balance, up to a maximum of $50,000, okay? There has been an exception in the past to exceed that dollar figure, but the standard figure is $50,000 is the max, okay? So in my exam, and what you do is when you apply for it, you don't want to apply for it, you basically say you want to take a loan as long as you meet the qualifications, you got a job to pay it back, you have the correct dollar amount balance in there to do it, you put in how much you want to borrow, you put in what time frame you want to pay it back. And when I did, I picked the maximum time frame, I think it was 5 years. So I'd have the lowest required monthly payment. The interest rate was set by them, and it was like the prime rate plus 1.75% or something like that. And we got ours through Vanguard, that was the custodian. I mentioned Vanguard yesterday. Okay, so we borrowed, I might have done it in 2 installments, I can't remember, it's been a couple years, but we borrowed a total of $46,000. We borrowed the money to buy the house, pay cash for it, and when you pay cash, closing costs are less, they're like $1,000 or something, and we had the $22,000 to pay for the rehab. So once it was rehabbed and once it was rented, the clock was ticking to get that 6 months, then I could apply for the cashback refinance. When I applied for the cashback refinance, an appraisal had to be done. And I knew I was told by the lender I could borrow up to, I think, 70% or 75% of the appraised value. So I was kind of like, I was playing with numbers. What will the appraisal come back at? What if it only comes back at $50,000? 75% of that is whatever it is, say it's $40,000. I would not recoup all my money for my 401k loan. It was in my wife's loan, actually. I didn't have a 401k, my wife did. But the appraisal came back at $77,000. So when I ran the numbers, I could have withdrawn, or I could have, got cash back, something like, I forget, 55, 56, 57,000, something like that. But I played with numbers and I came out with a figure of $51,500. $51,500, the mortgage that would be on that figure would still give me a positive cash flow of over $200 a month, or right around $200 a month. And it would completely 100% cover all of my expenses to buy the house, the closing costs to buy it, to rehab it, and the fees to do the cashback refinance. And when it was all said and done, I think I pocketed maybe something like a couple $100 or maybe a maximum of $1,000. Okay, so we got all of our money back to repay the 401k loan, and we've been paying it back in my wife's paycheck. Every paycheck she would pay whatever that payment was. So it was already, the balance, we borrowed $46,000, it might have been down to like $41,000. So because we had paid money back from her paycheck. So when we got the money and paid it off, we owed maybe $41,000. So we had money that was in our pocket, but that was kind of recouping her lost paycheck from it. So basically, in a nutshell, that house is a free house, okay? We got all our money back that it took to buy it, 100%, plus a little bit more. So it's our free house from the BRRRR Strategy, utilizing a 401k loan. So if you have a 401k, I'm not telling you to do this, I'm just telling you what I've done. It's an option, it's a tool in your tool belt, it's something you can look at doing, okay? Now, this is also, I call it my cursed house in a way, because my first tenant there was a scam artist. My property manager found a bad tenant. When it was all said and done, I got the majority of my rent. But rent was like $750 a month. So in a year's time, that's what, $8,000 and some dollars. I got maybe $7,000 and some dollars. So I got the majority of my rent, but she was a scam artist. I won't go into detail on it, but we got her out. And she left owing money, like $1,400 maybe she owed. And we got another tenant in there. And I, meanwhile, had changed to a different property manager. Now, this tenant does not want to get out. I came to the conclusion that I was going to sell this property. I told the tenant, my property manager told the tenant that we're not renewing the lease, and they would have to leave the premises. So now that tenant is refusing to leave. So we're dealing with that. The eviction process has started. Meanwhile, work needs to be done to the house, but we're kind of holding off because I want to put it on the market, but that means we got to get her out so we can start paint it and clean it up because it needs some work. Again, the 2 tenants in a row, they've done some damage, and they're not major damage, but it needs to be cleaned up. Trees need to be trimmed back, cut down. So it's going to cost a little chunk of money. But my real estate agent down there, who's my contact, he's telling me he thinks he can list it for $90,000 to $95,000 and perhaps get, say, $85,000, $85,000 to $90,000. So even if I have to spend a little bit of money, say it's my free house. The house, $51,500. The mortgage has been paid. I owe maybe $49,000 right now, something like that. So say I spend $10,000, $15,000 to do all the cleaning, the fixing up and whatnot. So I'm like 51, 61, maybe I'm 60, say 65,000 to 70,000 all in. I may have a profit of $15,000, $20,000. Okay, and it's been 2 years, unless it's been 3 years, 2 or 3 years. I'm just having bad luck with property managers down there. I'm on my 3rd property manager. I've had bad luck with tenants back to back in that house. I have another property down there. I've had the same tenant for 3 years, but then my property managers have never raised the rent in 3 years. And I like that little house, but I'm going to also next spring tell that tenant the lease is not being renewed, give her notice. I think she'll leave. She's a decent person. I think she'll move out on her own. And then we'll go through and we'll paint that and do some minor work to it. And then we'll put that one on the market also. And then I'll just be exiting the city of Birmingham, at least for the time being. I will never say never that I won't go back to invest in that city. But for the time being, I am finding better deals in the Midwest in a different state. I have better options also in oil investing and mineral rights investing. So I am going to exit that state, for at least for now. So with that being said, hopefully you've watched this and you've learned something. You got both the BRRRR strategy, and let me caution you, I'm sorry this is at the end, let me caution you. The BRRRR strategy is risky, okay? It is risky because unless you are an expert contractor, you just don't know what is inside those walls when you start doing the work, because you're buying a distressed home. You just don't know what it'll be. You may budget $25,000, but it costs you $50,000, okay? So really do your research, do your due diligence, run your numbers well, have good contractors you can count on. But it's still, there's a risk element to it, okay? Because what if you can't do the cashback refinance? What if the bank denies it and you can't do it? If you use the HELOC, the 401k loan, and you're working, well, you can keep paying it back, but now your paycheck is less and you're not able to recoup it. If you've used money from some other source like hard money, and then you got to pay it back and you can't refinance it, how can you pay your loan off? Okay, so be aware. I haven't gone into extreme detail on this, but I've told you enough to realize it can be a great way to get a free house, but all BRRRR strategies are not successful, so be careful. 401k loans, you can also use them for other things such as a down payment. Maybe you get a mortgage and you need that down payment, and maybe that 401k loan can be that down payment. The downside is you're not doing that refinance in 6 months more than if it's a good house. So you have to pay the 401k loan back from your paycheck, okay? But this gives you another option, something else to think about, okay? That's what this channel is about, trying to tell you what I've done, share my stories that hopefully will help you out to get you on the quickest path to wealth, which is by buying real estate. And once you get wealthy, other doors open up to you, okay? But you got to get there. To get there, you got to get started. You got to take that first step. 401k loan is a potential first step for some of you that can get you started, okay? All right, hopefully that was helpful. Okay, enough's enough. Mazske is signing out.